Hey, welcome to Steve Couper's podcast, where we bridge the gap between aspiring real estate investors and accredited or high net worth professionals. Whether you're looking to grow your wealth passively or learn how successful investors structure deals, you are in the right place. I'm your host, Steve Couper, and let's dive in. Everybody, and welcome to Steve Couper's podcast. I am super excited today. My guest is Zorya Belanger. She's a real estate investor and syndicator. She's got $28 million worth of assets that are under management. She's a former engineer, so speaks near and dear to my heart. And she's also a mother of two. Must be a lot to balance. I really like this phrase I found, the magic behind how it happens, bringing together the team, the property, and the capital. Zorya is the magic. She's a co-founder and asset manager of BREI Properties. I am so excited to get to know you more and be able to share your story with my audience. Welcome.
Thank you. Thank you so much for having me.
It's a real pleasure. Zorya, did I get anything wrong in that? And will you please tell me more about yourself?
No, that was right. Yeah, that was a way that somebody helped me put it together to explain to people what I actually do. It's like, yeah, the magic of putting all this together.
You are
As
the
I've
magic.
gotten into bigger properties, bigger deals, I haven't been able to do it all, even, yeah, in most of my deals. I'm often the leader of it, but it's not just all on my own. So, yeah, it's my husband is a big part of it.
Very
I
good.
can, yeah, kind of go into my story a bit for those that don't know me. Like you said, former engineer, was working in my career for a few years. Like getting my PN was always the focus. And then, we started, my husband and I, we were both in engineering together, and so we were both kind of on this journey, and we started realizing that we didn't really have much of a plan for retirement. We already are like a few years in, already thinking like, where are we going with this? And we didn't have any investments. We didn't really know much about that side of things. We were just so focused on our studies and our careers at the beginning. But we started reading more and more books, and that's how we came across one of the Rich Dad, Poor Dad books. Specifically, Retire Rich, Retire Young was one that caught our eye. And so that was really how it all started. That was 2013. Both listened to the audiobook as we were driving home from BC, and that's what kind of made us first think about like this owning real estate, and the business side of it, and the ability to potentially make that into a business. And yeah, pretty soon after that, I did a little bit more research and found out that there was quite a big real estate investing community in Edmonton. And we were pretty naive back then. Like I remember thinking, like, I wonder if anybody in Edmonton invests in real estate. It's quite funny to think of that. But my parents, owned their own homes, but they didn't have rental properties. And yeah, but then this whole new world opened up. And it really made a lot of sense to us pretty quickly, being engineers and just understanding the numbers. First, I didn't understand how you could possibly make money by buying something. Yeah, it all was broken down. It made a lot of sense. And yeah, it just went from there. We kind of quickly learned what we did. We needed to put a team together. And we did that at our very first acre, rain event that we went to. And yeah, we were able to buy 2 properties on our own after that, and then ran out of our own money, so we got into joint ventures, did that for a few properties. But then we got to the point that our joint venture partners, it was harder to make it work. Like, they didn't want to qualify for more mortgages. It was getting really, really difficult for them to do that. Like, the banks just, always getting it harder and harder to qualify, and they needed to give so much information about everything that they had. And we couldn't qualify anymore either. So that's when we started looking at multifamily. And we thought that it was probably, being in the rain room for several years, we thought that's probably something that we'd get to eventually, but didn't know if it was quite the time. But because we had like 7 residential properties at the time. But yeah, we had a few conversations with some people in it and who had multifamily, and yeah, realized that it was perfect time to get into it. We had a good sized net worth that would help us qualify for multifamily, and we would be able to structure it in a way that we could qualify for the loan and our investors wouldn't have to. So they would just have to put in the capital. We would qualify for the loan, do all the work. So a much easier thing. And it's so much more common to then also do a syndication where you're bringing in multiple people in. So you don't have to find someone who that invests 100,000, you could have several people put in 30 or 50,000, and it's a much easier thing for people to do, especially when you're just starting off and you don't have as big of a track record. It's easier to just raise smaller amounts. Yeah, and it kind of went from there. We did our first sixplex in Edmonton, which was a brand new build, and that strategy worked really well because we had about a year that it was being built that we could finish raising the capital and put that whole structure together before we closed. And that was our first one that we did with CMHC. And then we did 3 more after that because that went really well. And then that's kind of what got me the opportunity to do larger deals. So I got involved in a group that was investing in the US or growing in the US. So I got the opportunity to be part of that. And I became the asset manager of a 144 unit complex that we purchased in Houston. It's been 2 years now since we've purchased that. We've done the refinance of it, renovated it, and now it's like a good stabilized asset, and we're looking to do the next one now.
That is such an amazing story. Look at that growth curve. It's all up, up, up. Well done. I'm going to break down what you talked about here. A few things really stuck out to me, and the first is, the young professionals, you actually focus in on your education, and you're working, and every day you're running it, trying to get that project finished and looking at the target. And so many of us, I think, have just kept on moving forward from project to project and forgetting about that investment. Where are we going? What are we doing? And then all of a sudden waking up and realizing, oh my goodness, look at how time's going and I need to get there. So the story about, reading the Rich Dad, Poor Dad and being able to actually get inspiration from that and start in the investing journey, I think this has actually impacted so many people. But a lot of people don't know where to start, right? They don't know how to actually get into this, and they're looking for somebody like yourself, myself, to actually be able to reach out to and say, how can I do this? And I think this is great that you're offering this opportunity as well. You actually, I believe, teach a multifamily course too, don't you?
Yeah. So that's part of my journey too. So just over 2 years ago, I was helping a lot of people one-on-one, because they were coming to me with wanting to do the same thing that we did, and I was just helping them kind of as a consultant. But I found that wasn't really the best use of our time. Like, there was so much that they needed to know, and just teaching people one-on-one was not the best use of my time or their time. So I created a course, an online course, where I put everything that I know into that so that they could watch it on their own time, and then we could then have one-on-one calls and group calls with other people that I'm helping. So I basically put together a 12-week program to help people get into their first multifamily deal. And we've had over 50 people now go through the program, and over 108 units closed by all of the mentees combined. Maybe more now. That was when I last counted a few months ago.
Mentees. You're the only person I've ever heard use that word, but I think it's correct, grammatically correct. Mentees. So let's break down a bit further then. So you started investing in Edmonton. Do you still invest in Edmonton
Yes, yeah.
area? Yeah.
We have our portfolio here, and we're actively looking to buy.
I mean, it's been a very hot market for a while now, right? And we've seen a very distinct boom with Edmonton following, I believe, Calgary as it's growing up. Where do you see that market now? And if the market's changing, do you change your investing strategy?
Yeah. Since we've been in this market since 2013, we started buying, and then we went through when it was going to boom in 2014, and then oil crash, and that really affected the economy in Alberta and Edmonton, and in certain areas around Edmonton, even more than Edmonton was affected, like in Leduc, where a lot of manufacturing was. We saw a drop in rents of like 25% at that time. Like, we were at like $2,000 for a 3-bedroom single family home, down to like $1,600, $1,650. And it stayed like that for a while. That was a good thing to go through. And we're lucky that we didn't have that many doors at the time. And we had $400 of cash flow. So we were okay. We just were break even for a while. But I see, I think it's helpful to have that experience because I see kind of similar thing happening now. Like we're back up to above those rents. We're at the highest rents we've ever had in Edmonton. And and so, yeah, you just have to be a little bit more cautious. You don't necessarily have to change your strategy or what asset class you invest in. You just have to be aware of where rents were, where they are now, and where they probably are expected to go. And you just have to be a little bit more cautious in these times. Yeah, I think too many are like seeing this as exciting time in the market and rents are up. But yeah, you just have to be careful. It's an exciting time for sellers.
Exciting time for sellers, isn't that the truth?
Yeah, a great time to sell right now. Like it's the Alberta market is cyclical and it's, what do they say? It's history doesn't repeat itself, but it rhymes. So like we can kind of see that a similar thing will happen soon. Like we don't know exactly when or why, but there's going to be a certain point where the rents do start to soften. And we're already seeing that a little bit. And it's because of the supply in Edmonton. It was like all.
There's been a boom of construction, like it's certainly been, taking off. But you're right. I mean, when you have rents that are going to drop that much, investors need to make sure that they're managing their risks, right? Considering that rents will eventually come down below that 2% that everybody's talking about vacancy rate. When that vacancy rate increases 5-10% and you're needing to lower your rents in order to keep the place full, that can happen, right?
Yeah, it can happen. And too many are like, haven't had that exposure to Alberta and don't realize that that can happen, but it can.
It can happen. I mean, it's one of the beauties, I think, of the Alberta market is that the landlord-tenant laws are structured such that the market is self-managing almost, right?
Yeah.
So we don't have mandated caps. We also don't have anything in the bottom, right? So if it drops out, it drops out and you're on your own. So I think that allows it to be healthier than most of the other structured markets where there's some kind of imposition on top of this that's as controlling rent increases, but not controlling expense increases, sort of thing, right?
Yeah, exactly. Most people, like, I guess tenants, they think that rent control would be a good thing, but like we've seen it keeps rents up. Nobody wants to drop their rents because then it would be harder to get it back up there. And it also doesn't encourage more supply. Like here one's building, you just drive around and you just see like framed buildings everywhere. And so one interesting fact that I found out about Edmonton that Edmonton had a kind of 3-year plan for the amount of permits, amount of building that they wanted to build in 2024, 25, and 26. And in 2024, they reached that 3-year goal. So anything that's now being permitted after that is just almost excess. And I expect that there's the same, if not more, permits issued in 2025 than 2024. So it's going to be interesting. And we see it, and we saw it like this time last year. We kind of saw it happening in Leduc, where we were looking to buy a 24 units, but we were just, well, based on our experience already in Leduc, where rents dropped 25%, and Edmonton was similar, but maybe 20% drop. Like we knew what could happen, and we just felt like we were at that point again that this could happen again. If you look at the data of how many people are actually moving to the city, it's very linear. But if you see the number of permits, it's just exponential. So it shoots up. And then, there's a correction and there's a lot of vacancy. And so we saw that it was a really good market to be in last year. There was very few rentals, but we saw a lot of building going on. And we're like, okay, in the next 1-2 years, it's going to be a different story. And here we are. We're like they were in the low single digits last year of how many, say, 3-bedroom units there were to rent. And now there's like, say, 7, and now there's 45.
Right.
Like a huge amount, a huge difference.
Big changes.
And we see kind of a similar thing happening in Edmonton as well. So it doesn't need to be like a big economic downturn in the economy for, rents to kind of stay affordable and then kind of soften a bit.
That's fascinating. I didn't actually know that they'd already achieved their 3-year goal in year one. But
Yeah.
do you think that that goal had to be adapted because of the immigration and migration influx of people into that area? I mean, it certainly, I think, exceeded any of the anybody's imagination, maybe.
Yeah, they probably would have made that goal in 2023 if that 3-year plan.
Yeah.
Um, and yeah, immigration has changed, so that's another factor as well. They were probably predicting that maybe it would continue in similar fashion, but it has slowed down.
Yeah,
So
it's
we're kind
certainly
of
changed. That's
still
another roller
catching up.
coaster.
Yeah, it's another roller coaster, but a really important factor to consider because it's simply supply and demand, and you just have to have like a good pulse on what's going on with that. And yeah, there's a lot of demand coming into Alberta, a lot of people moving here, but I find it's not necessarily because um, of the like the GDP and economy here. It's more worse other places. So there are people that are coming to Alberta, but they're maybe coming and then finding a job. They're not coming for the job.
Interesting. Yeah, something to watch for sure. Those that are thinking of investing in Edmonton, make sure you do your homework.
Yeah. But
Yeah.
we're still looking to buy, but it just means you have to just search a lot harder. You potentially, you don't find a property to buy from a listing. You reach out to owners because there's always going to be owners in any market that need to sell. Maybe they're just at a time in their life that they don't want to manage their portfolio anymore. They're looking to exit. And, they're seeing people, sophisticated investors who've been in the market, who've been through a few booms, they probably are seeing is this probably their last chance to sell. And yeah, there could be an opportunity there if they realize that, yeah, if they don't sell now, then maybe the value will go down next year or the year after. And
It certainly appears that way, right? I see a lot of listings right now that, it's very much taking advantage of the seller's market. These listings are really priced very high.
yeah,
And it's hard to actually calculate the value of the property and reconcile that with something that the financial institutions would support, right?
yeah. Yeah, so but I think there's ways to make that work for the seller and the buyer. Yeah, if somebody actually does need to sell and want to sell and not just taking advantage of the market and this sudden increase in rents because we have, probably across our portfolio increased the rents probably $150 a unit, naturally not by doing any renovations, but that's after being pretty stagnant for many
Well,
years.
Edmonton had a flat of rent for a long time, didn't it?
Yeah,
Right.
and yeah, I think like my prediction is that we're going to soften a bit. So you just need to be able to get through that downturn, and then it'll go up again. It
Okay.
always is. That's we can't get rid of inflation and
Yeah.
and increasing rents, but yeah, you
And
just got to get through that downturn, and it could mean just having bigger reserve fund to start, or we're looking at different grants and government incentives in order to like have a bigger cushion from the beginning to just get through the downturn, whenever
right.
that could be.
You're wise. You're very wise. So you mentioned a term syndicated mortgages, and I'd like to actually have you explain that in greater detail, maybe. I mean, it's a term that's used quite readily down in the States. You don't hear it in Canada so much, but I think it still applies with the same definition.
Yeah, well, we've done syndications, like the deal has been syndicated, not the mortgage. So I'm not familiar with what syndicated mortgage is,
Okay. Well,
but
then tell me about syndications.
syndication, what we do, it just means bringing people together to do a deal and bringing in multiple investors, people that are contributing capital in order to buy something together that somebody on their own wouldn't be able to.
So you would do that under a GPLP structure, or you would do that as joint venture, or how do you structure those deals?
Well, yeah, a syndication doesn't, that just means bringing people together. It can be done corporately, it can be done with an LPGP, a limited partnership. It could be done as a joint venture. So we've normally, on our smaller multifamily, done it as a corporate structure because usually it doesn't make sense to pay the expense to create a limited partnership. It is more expensive to set up, and that doesn't usually make sense unless you're doing a bigger deal. So that's why we did use a limited partnership structure on the Houston property. But for here, if it's, yeah, we're still looking kind of in the $5 to $7 million range. Our plan is still to do it as a corporate structure.
Corporate structure.
Yeah. then there's still ways to do it where our investors are non-voting shareholders. And so therefore they're, in the eyes of a lender, not seen as people that they need to guarantee the loan. So we can still, even though they could own as a group up to 50% of the building, they don't need to guarantee. So there's different ways. You have to look at how much percentage each person has. You have to be a little bit more careful about how you structure it if you do want your investors not to guarantee the loan. So it's a little bit trickier, but still it's makes sense on the smaller deals.
Just from the cost of putting the structure together.
Yeah. But I know some investors who, they do smaller, say several infill eightplexes, and they've done the limited partnership route even for those, but they've justified the cost because they're doing multiple projects and they just kind of reuse that same partnership agreement. They're not paying the lawyers multiple times every time to do it again, and they're just repeating the same template. So that's another way to do it.
Yeah. So let's now talk about the 144 units. So that's quite a leap up from a 6 unit, certainly. And so you're part of a group, as you mentioned, but you are the magic behind how it happens. So I'm really interested in how you found yourself into something, that is really quite that significant.
Yeah. Well, it just was a matter of connecting to people. When I first got into multifamily, I joined several different coaching groups. I've had several mentors, and that's really helped meet other people that are like-minded who want to do similar projects. And yeah, it was kind of through those groups that I ended up meeting people who wanted to do something bigger. I had always had my eyes on the US because I had, certain people that I know have done really amazing things in the US, like Janet LePage. Probably, I think she's over 5 billion in assets under management. And, she's from Vancouver, and I can see what's possible there, where several people can get together and you can buy much bigger properties there than here. Here it's a little bit more competitive, even on the small stuff. So institutional investors, REITs are buying up 20 unit buildings, but there you can buy a big complex, 100, 150 units as a small syndicated group, and you don't have to be an institutional investor, and you're not competing against them. They're looking more at 250 units or more in the US. So I kind of knew that, and I knew that, in some markets, the price per door was significantly less than in Canada. Just especially that the price per unit versus how much rent you could get, that multiple is better in a lot of markets in the US. So I had my eye on that. So when I had the opportunity to join a group and participate and actively be part of a purchase in the US, then I just took that opportunity, and I was able to use the asset management and my skills of figuring things out to be a big asset as the asset manager to the group. And a lot of really great people were pulled together for that. It really, really was about the team. And we had a really great contractor, property manager, construction manager. If any one of those things did not go well, it would have been a different story. But because we had such a good team, we were able to put about $2 million of renovations into that, which we originally bought for $11.1 million. Then, just a few months ago, we got it appraised for $17.9 million.
Such an amazing lift too. Wow.
Yeah.
Yeah. No, it's a different scale altogether when you're looking south of the border, that's for sure. So how did that challenge you? And what did you, I think that one of the best phrases out there is, who do you need to become to be able to accomplish your goals? So how do you feel you grew into that, and how what is it that you want to become next?
I think that is part of it. It is a bit of a lot of mindset. That's the very first module in my course, is about mindset and kind of tackling those limiting beliefs of kind of, who am I to do this, and those kinds of thoughts that a lot of us have. And I think a lot of the strategies that I've used have been, I guess, surrounding myself with other people who have done bigger things. Yeah. And then it doesn't seem as big of a stretch. It actually seems small compared to what these other people have done. Janet LePage, Ashley Wilson in the US is one of my mentors. And yeah, all these, what really helped, like, I don't know if this is answering your question, but I think this would help your listeners that I was able to get connected to like, they were like the asset management queens. I was on a WhatsApp chat with like all of these other operators, female investors in the US. And yeah, I kind of like was able to, I knew, okay, part of it was I knew that if I didn't know what I was doing, I could knew who I could reach out to.
So that
And
comes
then
back
also
to,
just being surrounded by people that were doing bigger things, it wasn't as big of a deal, I guess.
no, it's nice. That's really nice. I guess that's the who, not how kind of equation too, right? Who do you need
Yeah.
to know to help make sure you can actually learn this? I'd
Yeah.
say,
That's what kind of was like the confidence boost. Then I if I couldn't figure it out, I would know who to reach out to. And yeah, and who do I want to be next? I want to continue growing. Yeah, I'm looking at potentially being involved in a 112 unit building in Houston as well. So very similar, exactly the same vintage as the last property, just bigger. It's very ugly, which it's great because that's the easiest thing if you just do a cosmetic renovation. It's funny how ugly it is and how easily you could just remove the animals that are in front and it looks so much better. But yeah, they haven't done that.
my goodness, I look forward to seeing this one.
Yeah, like it looks like the entrance to a zoo.
So, yeah, one of the questions that I try to make sure I ask each and every one of my guests is to understand their why. What is it that's moving you? What are your goals? Where do you want to get to, and how are you going to know when you get there? It's many questions in one, I realize, but start with your why, please. Tell me why you do this.
Why initially it was because I didn't want to get stuck in my job and I wanted the freedom and flexibility. I didn't want somebody telling me what I needed to do. And I knew you kind of touched on it at the beginning, like, yeah, I didn't want to get to that point where it was going to be too hard to then switch careers. Like I could see people that I was working with that were stuck. Like it was too hard once you're 40 years into your career to like switch. Even though you may not be that happy with it, it's too much of a change and too much of a leap. And especially when you have bigger costs and responsibilities, once you have a family and kids, it's harder to take a leap. So that was initially my why of like kind of doing something different. And I continue to grow and do what we're doing to kind of maintain the lifestyle that we've created, to not have to go back to a job. And I really, really enjoy it. And my other why is now that I've been, doing this program and helping a lot of people, I really, really do enjoy that and helping other people do the same thing. It's really fulfilling. I want to help people by like helping them avoid big mistakes because and I see that all the time, all these pro formas that are all wrong. I just want to help people like not buy that and run the numbers properly so that because I know that what can happen, like people can go bankrupt if they buy the wrong property and they're over leveraged. And I just don't want to see that happen to people.
There's a lot of bad performers out there, that's for sure. You need to understand how to assess the building and properly and be able to negotiate properly too. I think that those two go hand in hand, don't they?
And I should mention a big part of my why is my kids. Like my why has always been, I want to be able to have the freedom to travel the world with my kids and just have that flexibility. And I don't care if I still need to work really hard, but if I can do that, while in Spain, for example, then that I'm happy with that, And so I've been able to, do this asset management in Houston, mostly from Edmonton. Definitely have had to travel there, but I don't have to be there all the time. So if you set it up properly and always have your kind of goal in mind, you don't get into things that are going to, I guess, prevent you from reaching that goal.
Sweet. Any last word for our audience? Any things you think we missed?
Experts. You've had some really good questions. Yeah, I guess I'm happy to talk to investors if anyone wants to reach out and continue this conversation to know more about what we're doing next. Yeah, happy to, or even just if you're looking to either being involved passively or actively.
Perfect.
Yeah, have a
If somebody
conversation.
wants to reach you, what's the best way to get in touch with you?
They could email me Zorya at brei.ca.
Perfect.
That's probably
Perfect.
the easiest.
Well, I know something I forgot to say, and that's first off, thank you ever so much for coming to join us. And secondly, to all of the people that are watching this, if you'd be so kind, I'd appreciate it if you'd subscribe to this channel, especially if you've enjoyed this interview with Zorya. I think it's fantastic. It's been a real pleasure having you here. And I can't wait to hear how this next project of yours goes. Thanks very
Thank you
much.
so,
Bye,
thank you
guys.
so much for having me. Bye-bye.